Hey everybody, welcome to This Week in Pre-IPO Stocks podcast with me. You got Nick Fusco, CEO of ApeView, a pre-IPO secondary market pricing company, and Clint Sorensen, Chief Investment Officer at WellShield, an outsourced CIO and investment research company. Okay, we got a few topics today, fellas, so we're going to rip right through these. But the first one I want to hit on is freedom of speech in pre-IPO stocks. It's starting to resonate across a couple different things. I don't really want to get into the politics of freedom of speech. It's a hard no on that, right? But there's two things that happened in the last week. One, Elon Musk was at this deal book conference and went nuts about freedom of speech, advertisers, everybody saw that thing.
Wild,
and then
yeah.
also, but ByteDance, so the state of Montana came out, passed a law that said you can't use TikTok in Montana. Gone. The Supreme Court overturned it, or they're pausing the suspension, and they're saying it's on First Amendment. It's on First Amendment rulings, right?
Despite SAT scores going up, grade point averages going up,
everyone
kids
generally
paying more
being happier.
attention.
Yeah. So it's super interesting. So my point is, okay, TikTok's adding e-commerce, right? That's been a huge spend of theirs, right? And ByteDance is the largest pre-IPO stock globally, right? So that's why we're talking about it. And then X is also, Musk is talking about subscription model revenue. Now they got XAI and the data and monetizing the data for AI purposes, payments, right? So my question to you guys is, do you think that this kind of advertising as a source for social media, whether it's TikTok, X, other types of programs, is that going to be a thing that will continue going forward? Or maybe it's still, advertising revenue will always be a thing, but maybe just won't play as big of a role as it's currently played, in the past.
Definitely going to continue to be a thing, right? Because people are still going to buy stuff, and you got to get eyeballs to buy stuff, but it's not going to be the biggest driver, in my opinion. If you ultimately look at it, it's got to be data. Data's got to be the most valuable aspect of these platforms, ultimately, when all things go to AI. I'll let Nick talk first, but I got to say something else on TikTok that I saw today when I was on the plane, which is crazy to me. And it spills to how fast it supports how fast AI is just, changing everything. So, Nick, I don't know if you have any thoughts on the advertising role before I, start to go into my soliloquy.
I'm curious where you're headed. I'm curious if you're even in Miami for Art Basel or not.
That's right.
No, but I'm just going to agree wholeheartedly. I mean, when it comes down to it, you have these core businesses that are making so much money based off of marketing, advertising areas. Even Klarna is making boatloads of cash on advertising. You're able to hit people from all angles. I know that was part of Elon Musk's big rant, that the advertisers are walking away from him, but no, Clint, you hit it up. I just agree wholeheartedly on it.
Yeah. So TikTok, did you guys see what they're able to do now? There's an AI, and I don't remember the name. I just saw it when I was scrolling through X on the plane today. There's an AI that can literally match the dance moves of any kind of TikTok, and then you can have a mirror image of any individual you want, looks exactly like you or whatever celebrity you want to use, and you can recreate the dance with that individual, and you cannot tell the difference. They did one with Messi. It's nuts. You got to research this thing.
I saw something similar. Yeah,
they're saying bye TikTok or bye whatever, just because now for a content producer, think about what you're able to create. You can create unlimited amounts of content and get tons of eyeballs. So really, you can't tell the difference.
So another one that hit this week too is that there's this, I think it's an ad agency, right, in Spain that created an AI generated person. And that person's making 11 grand a month now, that AI generated person. And their reasoning was working with creators is they have too much ego. They're too challenging to work with. So we just made an AI version
absolutely
of a creator.
That's what this is about.
If people are buying in, and funnily enough, I saw a third version of this closer to Clint's, but it was send us a few photos of you as a child, and we're going to have you as a child sing your brother or sister or sibling happy birthday. And it's like
that's
you
crazy,
when you're 10
man.
years old singing. It's wild. Like,
there's going to be so much cool stuff coming on the pipe.
Outrageous.
Okay, but this
but
so
how are we
is
going to
my
monetize
point.
it?
One
right?
person
You're
company.
You got your
PR. You got your PR. You got your creators. You got your lead salesperson. You got your IR. Like if I'm a one-man hedge fund, like I'm just going to create a bunch of IR folks that go out and do nothing but content produce. Very attractive AI content producers that just, AI created individuals that go on all these platforms to just generate a ton of looks.
So listen, I got to tell you guys, but this is where I feel, because I was thinking about this topic this morning, and I'm like, when I was a kid, we had like the newspaper and then like the 9 o'clock news, right? And you paid for the newspaper. So I know there was advertising revenue. I actually looked this up, but like the amount, it was like a 50-50 split. People paying for the paper and then the advertising in the paper for the newspaper companies on like where they source their revenue from. And then, like television, I guess, was always advertising, right?
I thought you were going to say the AM radio, Aaron, but I guess.
Right,
Not
you
quite,
mean the ham radio, right? Is that what you're saying? Yeah, I am getting a little old these days. But now I wonder with all this AI, like this thing you're talking about, right, Clint? Like, hey, if you pay up, you can get the dancing, you get the dancing Messi, right? Or if you pay up, you can get, your sibling, your 10-year-old self can sing happy birthday to people. I mean, like, there's some interesting things coming. I can see people wanting to pay up for this stuff, Of
course. This is amazing.
So it's but you're right, Clint. Like, they wouldn't be able to do these things unless they had the data. Like, TikTok can't put together dancing people unless they have, like, hours and hours of data.
Yeah, but this is also a circular reference. Like, the money's going to come from the data, but the data is going to be used to make money through marketing, right?
Yes,
so
it is.
It's that
flywheel.
Or you go back to charging for the platforms, right? You have to charge for, which, once you have enough data, that might not be a bad play if advertisers annoy you.
So it's interesting. I think this freedom of speech thing might be a catalyst, right? Because now companies, I think, are kind of motivated perhaps to move away from advertisers being such a huge part of it. And, now that AI is here, to your guys' point, maybe there's an opportunity to actually do that, to actually feel like you can charge your customers or users, I should say, a subscription fee, and they'll pay it, right? Because they see real value there. So anyway, that was something that was top of mind. All right, next topic, Shein. Shein's going public. Okay. Do you guys, like, Nick, you use Shein? Do you order like 15 things on Shein and then try them on and send it to your wife to see if she likes any of them?
Returning items is a huge pet peeve of mine. So no, I will be physical buyer in the store.
Understood. Yeah, I'm not a shopper at all. So Shein's hasn't been on my radar. But Clint, what about you? You or your wife? You guys ever use Shein?
No, I hope my wife doesn't watch this, because that's all I need is more boxes showing up at the front door.
Well, so listen, there's these guys. So here's some stats for you, right? $66 billion in run rate revenue, right? $66 billion valuation as of May. They did a May 22 round, right? Run rate revenues at $32 billion for 2023. $32 billion.
2 times revenue?
Yeah. Low. I think that's low. And so Clint, they're 41% up from 2022. And they were, so that's year over year growth. So 2022 to 2023 was 41% growth. 2021 to 2022 was 45% growth, trading 2 times revenue.
Yeah, it makes no sense to me.
All right, so let me ask you guys a question. You're both very smart people, okay? Where would you guys put this company in an asset allocation model? You ready? It's like a trick question. Here we go.
Same place Amazon.
It's headquartered in Singapore. All right. The whole business operations is in mainland China. They only sell to people outside of mainland China, US, Europe, Asia ex-China, right? It's listing in the United States.
Yeah, typical multinational EM, man. This is multinational.
But Singapore's a developed country, right? MSCI says Singapore is a developed country. Is it a developed market country?
China's a developed nation to me too, but
fair point. I would agree with that.
I think at the end of the day, this is a global multinational company, and that we've got to get away from these nuances. these
just taking more of a global approach. You're saying,
yeah, these perspective nuances about all this. I think I think that hurts people, and I think it helps index companies, and I think it helps. I think it helps certain asset managers to capitalize on these definitions in order to get their sleeve in the style box. But ultimately, I think it's a global multinational company, and I think if you look at a lot of the U.S. companies, they're the same thing.
Right.
So Nick, if you look at the European, so let's say look at Zara, or you look at H&M and how they're acting, how different is it? And I actually am super curious what their multiple is, their revenue multiple. I can't pull that up on the fly. But,
2x seems low.
Pretty wild.
2x is low
for that growth rate. I mean, this seems remarkable, right?
But Nick, I got to tell you, I'm not talking, as I talk to people in the secondary market, I'm not seeing a lot out there on Shein. Are you seeing anything on?
No, I mean, we would look at some of the comps that are growing. So I mean, we brought up ByteDance earlier.
Yeah.
But I don't think that it still has that sort of growth rate at compounding 45% per year. It's pretty sweet, right? So
yeah, that's a lot of growth.
I think we'd have to go with the comps. And then also once you get outside of the U.S., your comps go thinner for the secondaries or for these unicorns. I mean, so much of the tech and services companies that are anything like e-commerce related are going to be born out of the U.S. So I would say there is a difference. But no,
Zara's cheap too. Guys, I pulled it up. So Zara, and this is from investing.com, price to sales in the trailing 12 month is 1x sales.
Okay, so
the industry is at 2.73 though.
Yeah, so if your industry is 2.73 and you have substantially better growth, why are we operating at a 2 unless nobody's trusting the numbers, right? And that's fair enough. It's hard to trust, right?
Well, you could, but listen, you could say that this is not a tech company like that. So then, if it's a clothing retail company, that might be right.
Well, that's the industry I was referencing.
Yeah. We're not talking like we work versus Regis, right? This is
it's consumer.
Well, what is interesting about these, they're not. So they make their own clothes, but they only sell them through the internet, right? So it's very interesting. I mean, and if they started to sell other people's stuff, which I want to say I read something where they're starting to do that, then it's like an Amazon. I think if you have a company that even though they make their own product, but they solely distribute to the internet, I still think that that's in some way, shape, or form a technology company, right?
Yeah, but it's interesting because then you can compare them to an Alibaba, but then you can also compare them to J.Crew. Like J.Crew started as a mail order clothing company and never had brick and mortar, and then only later had brick and mortar, right? So yeah, drawing the comps is the important part. So that's
I have to imagine that's what the management team's trying to do by listing the United States and like move to Singapore. They're trying to like probably, move away from this, China thing, which I'm sure is not getting a premium.
And maybe that makes it look more like a traditional company, which is great, and maybe more like the IPO market existed 10 and 20 and more 30 years ago.
Yeah, right.
Where you're going to get that pop by going IPO. And as of late, we've actually seen just the recently listed companies have just gotten pummeled right, over the last 5 years. So hey, maybe this is cheap for a reason. It's coming to market, and then it will be attractive once it's out there, and we can actually get really good audited financials on understanding how they continue to grow as a public-facing company with better metrics to report. So not for me.
I like it. I'm a bull, Nick.
All right.
I'm just a bull everything global here. From a valuation perspective. And this is just another, I'm sure, Nick, I think you're right? They're cheap for a reason, for sure, right?
Yes.
There's going to be tons of value traps. But if you look at just the difference in valuations for a company like this versus other companies in the U.S. that are getting valuations in the secondary market, it is massively different.
Yeah.
And there's got to be some sort of, this company has proven that it can grow. Right. It's proven that it can deliver
results. Yeah.
Yeah. How many users do they have? How many subscribers? And I forget, in the US, it's massive.
Yeah. It's big.
I remember one of our previous episodes we went over it, but that ByteDance, both of those companies are extremely cheap, in my opinion.
Yeah, so I think they haven't set a date for the IPO, but just the last thing. So Goldman, JPMorgan, and Morgan Stanley are running the book for them, right? So this is going to be a winner. This thing's going to be a
That's
winner.
legitimate.
Yeah,
that's nice.
So keep your eye out for Shein. All right, so another one that's coming down the pike, Canva. So this company was nothing on the secondary. They didn't approve anything. It was tough to get your hands on Canva shares in the secondary, at least from my experience. But they came out there with this Goldman conference, a couple key points. So they did their last round of 40 billion. They're now, it's like kind of table stakes out there at 25. So Nick, like the data that you have on AView, that's like a perfect match, right, for the implied valuation. Right. So that was out in the media now. They're doing $2 billion of annualized revenue at 50% annual growth rate, right? They got positive cash flow and minimal market spend. So there's a company, talk about Shein's doing 32 billion at 66. These guys are doing 2 billion and they have a $25 billion valuation, right? So it's like, yeah, so you're right up the alley. But what do you, so Canva does like graphic design. It's like graphic design for dummies. So like I could go in there, not a graphic design person, and I can use Canva solution and do social media ads and marketing campaigns and look like $1 million, right? That's kind of that's the point of Canva. But like, what do you think? It's a SaaS model. Like, what do you guys think of SaaS businesses? Obviously, big multiples here, right?
Yeah, love the margin. Love the general SaaS model. Personally, yeah, I don't own Canva. I don't think I'm going to be buying Canva anytime soon, but I use it, and it's phenomenal because, it's if we want to call it creating marketing content for you with a little touch or sprinkle of AI in the mix, even if you don't use those components, we certainly have potentially disrupted our agency to a certain extent, saying, check this out. We put this together in 30 minutes. What do you think? And I love it. I used it this morning. I used it last week. We use it pretty much every week here at our shop.
That's cool.
I think it's pretty wild. And yeah, the incremental user on that, the margin is just outrageous, right? Because you're not going to markets and creating another T-shirt, spending out another silk screen or jeans, right? This is all operating in very minimal support. So I love the mechanism. And yeah, like you said, we saw it come off pretty significantly from the prior round. I think it was a little bit higher than what you're saying, but it's like T. Rowe, Franklin Templeton, Sequoia, Bessemer, a lot of big names are in the mix. And the secondary market's heating up, clearly with the ability to do some of the secondary activity on the name from what the CEO was saying. We're valued right in that sweet spot at 25 billion. And then I think the funds on average that are holding that are about 10% under us, right around 22-ish.
Right.
So yeah, I think all signs are pointing to a strong understanding of the valuation here, which is pretty cool.
Okay, so
you don't get that everywhere, right?
What was their peak valuation, Nick?
I think about 60.
40.
60.
60?
I think so.
Okay. Yeah, so that it's come down a lot. But I will say this though, they're doing a tender round.
2021, September of 2021 on that.
Yeah, so they're doing a tender round right now, Clint, and I think it's at that 25. So this is another one, right, that's coming out with a tender and then doing kind of an IPO, shortly after that. So they're kind of like locking in a primary round number out in the marketplace, and then the IPOs are hopefully going to go from there. So, I mean, what do you think? Do you like this company at that, or is it still a little too rich?
I like the company. I like the growth. I like the fact that they're running this tender well in advance of the IPO and getting a sense of having their own internal employees pricing it.
Right.
Think about that. If I'm an employee and I got to sell some of my shares at the 25 billion valuation, and then maybe I sell like a quarter, and then the IPO comes and maybe it's higher. Awesome. I'll do another quarter. Maybe it's lower. Okay, I'm going to hedge out and do another quarter, and then I hold on to half. You're keeping your employees really, really happy. They're not going to leave because they've sold their shares. They believe in the company, right? I think it's a really good exercise to do, especially one leading up into the IPO.
Right. Yeah. Clint, what do you think of this $25 billion valuation number?
I mean, it's down a lot from its peak value, and I think if they're incorporating AI into the mix and can continue to stay relevant in this space, which I think they can, right? You're hearing a super user and Nick talk about how he
I love it.
uses it all the time,
Yeah.
right? And I've used it in the past. I've always been very impressed with them. I think they have staying power, and I think they have a good product market fit as long as they continue to innovate. I think that valuation seems fair compared to what they're producing.
Right.
And then when you think about how cheap it is relative to the September 21 round, that's pretty amazing. I mean, again, just points to these opportunities that we have in these private stock markets because of the liquidity trends we've seen. So yeah, I'm optimistic on this.
Particularly with who the investors are, right? Because it went from kind of some of your earlier stage investors and middle tier stage investors to eventually landing with your Franklin Templetons and T. Rowe Price. These are seasoned veterans, right? And when the majority of the holders of those funds are already public investors, they're in the mutual funds, things like that, you gotta have to expect that the valuation due diligence that's been done here is extremely thorough, and that's almost ready for market. You know, you transition from your Bessemers and your Green Oaks of the world and your Sequoias of the world to become within the portfolios of your T. Rows and your core holders like a Franklin, right? So I don't think they're insanely high or off market on this.
Yeah, so no date set yet for this IPO, right? The tender looks like it's happening right now. So I'll keep you guys updated as we go through. All right, so two more quick ones, right? I don't know if you guys are Kiss, the band fans, right? But they're partnering up with George Lucas's Industrial Light and Magic. That's a company, Industrial Light and Magic, to create a Kiss avatar show, right? So this is supposed to mirror what ABBA has done. I don't know if you guys are big ABBA fans either, but ABBA did one of these like avatar shows. They're pulling in $2 million a week with their avatar show, right? So thoughts on, would you go to an avatar show? Would you go to maybe not Kiss, not Kiss fans, but another band? Like what do you guys think of this? What do you think of these avatar concerts?
I'm kicking myself that I didn't get to go see Gorillaz like 10 or 20 years ago. So Damon Albarn, like Del the Funky Homo Sapien, as these larger than life gorilla avatars of theirs, and naturally I finally had to found a company based on gorillas, right? Just because I couldn't see that show. But no, I just think it's so wild. Like, why not? I mean, it's almost, you can have these special effects ingrained in the characters so much better than anything else. Whether it's going to be up on a big screen like IMAX or some other way. Absolutely.
The Sphere. Yeah, right. Yeah. The Sphere is coming soon. You know that too, right? What do you think, Clint? You like an avatar show?
Yeah, I love this. So I'm a big rap fan too, so I would love to go see Tupac, Biggie.
Oh,
right. I would just love it. So I'm all for this.
Listen, Clint, it's funny you say that because the guys at Kiss, they were like interviewing the guys from the band, and they're like, the band doesn't belong to us. The band belongs to the fans, and it should live on forever.
There you go.
That's what they were saying, right?
Well, imagine a Michael Jackson Avatar concert. How many global fans would show up for that?
Oh,
I mean, it's nuts.
It's kind of interesting, man, because now, like, if you're a living artist, right, you're now not only competing with other living artists, but also all of these people that are not alive anymore either.
Quality goes up. And you can have AI generate your own new music, right? So you can have a quote unquote dead artist, right, create new music in their voice and then still do the show thing. I mean, I don't know. It's nuts. I love it. You saw these concerts are getting really popular. Like, think about Eminem just did a Fortnite concert. We've seen, and he just did that over the weekend. So
that's cool.
These concerts in the metaverse are huge. I think metaverse, all this AI, I think all of this is going to drive quality up. And I think it's going to drive whoever is kind of the top quality producer of content is going to be rewarded exponentially.
Right.
And I don't think we can quite fathom what that exponential reward is going to look at. I mean, I think we're getting a glimpse of it in like the Taylor Swift era, right? With these Swifties and how they've come out and really in support of her and how much she's generated in revenue from a show. Think about that with in a more tech-enabled way.
tech-enabled. If something could also further disrupt Ticketmaster, I would be happy. I just think the egregious approach they have to ticketing and the encouragement of scalping, driving up prices, things like this, just nuts. So I was also kind of talking about this with some colleagues this morning and saying, you know what, if you could have some sort of tokenization aspect to it that inhibits your reselling, maybe there's a reseller fee that dings you for scalping or something, or jacking up the price. Maybe more of that can go back to the artist. Maybe more of that can go back to a better version of an ecosystem here.
Or just not let you change the price. You just have to sell it for what you bought it for.
Fair.
You know?
Absolutely.
And think about this. Think about if we did this in athletics, right? So we've got this LeBron James, Michael Jordan debate on who's the GOAT. Imagine if you could take statistics, right? You model these players, you mirror them, and you could literally watch these two teams historically.
It's Jordan, though.
And one,
can we agree on this?
And one from the present.
Chicago guy coming out.
Yeah, and one from the present go at it, right? Like how awesome would that be? Like to be able to,
that's true.
You know, take data. Fun, man. I mean, I love it. I think it's the best time to be alive. Creativity is rising to the premium it's always deserved, instead of stripping and taxing value from folks and just peddling. Now we're moving to where creativity is rewarded exponentially.
Yeah, it's capital markets for creativity people. Yeah, but I mean, fellas, just imagine when this stuff actually hits like augmented reality and proper like immersive VR. I mean, people, photorealistic avatars, like this stuff is going to be awesome. I think it's going to be really cool. You know,
that's what I want for Christmas. I'm going to get myself some of the Oculus stuff.
Perfect segue. What are the best Christmas? We talk VC all the time, right? All this emerging tech and everything like that. If you're a dude or a lady, right? What's the coolest tech? What's the coolest tech that you want this Christmas? Like, come on, Nick, hit me with it. What do you want? What do you want? What does Nikki want for Christmas this year? Right?
Honestly, hopefully my son isn't listening. Walkie-talkies. We talk about this crazy tech, immersive technology, Oculus, things like this. Guess who's getting walkie-talkies?
You're getting them, or you want to get the walkie-talkies?
No, we're getting walkie-talkies for my son, right?
And y'all remember the phone that was the Nextel when you had like the walkie-talkie? I was like,
unlimited.
This is the best. It's the best thing ever.
I remember that. No, but what about you, Nick? I understand that your son. What do you? I know you don't want a humane AI pen. I know you don't want that.
No, I hate the humane AI pen. I have the Oculus. It's been collecting dust in the box for a year. I'm kind of going more analog. I mean, what do you guys have on your wrist right now? We've got some analog things going on.
Nothing.
Old tech. Old tech.
But I think that's kind of what I enjoy when I'm disconnecting. But if someone could add significant utility in my workday and it's very tech forward, then I'm happy with that.
Okay. Okay, fair enough. Well,
Nick, we're going to analog in my house this year.
Old school. I like that. Yeah. What do you think, Clint? What do you got? What's on the wish list this year?
I'm going the other direction, man. I just saw a flying car that just got announced. For flights, I want that. I want Apple. Yeah, I want one of those because it's bulletproof. I don't know why I need a bulletproof Cybertruck. I want some of those robots too. Did you see the little video? I don't know if it was real or not, but the Tesla robots shooting up the Cybertruck. Yeah, I
saw that. Yeah.
I want a couple Tesla robots, do some housework.
Tesla flamethrower.
Yeah, I want all of it. Give me all of that. Give me the Apple headset, the Oculus headset. I mean,
you're embracing the technology. I appreciate that.
Might as well. You can't beat them, join them. I just, give me Neuralink. I'm just ready to go full cyborg.
Oh, Neuralink would be a cool one. That's like years away, but one of these days. Yeah, it's pretty. There's a lot of cool stuff to look at this year. I think this next couple of years are going to be really fun, right?
So what's going your way? What's under the tree at the Dillon household?
It's interesting. I'm actually looking at making photorealistic avatars for everybody. I think that's so cool. Like, actually, I'm going to do Clint, like out your way, Epic Games, Unreal Engine, right?
Oh, nice.
They just announced this thing. You can do like a face mesh, and then they can put it in to MetaHumans, Unreal Engine, and you can make like an Aaron Dillon photorealistic avatar. And then you can
that's really
connect it to ChatGPT, and it can talk as you. Right?
So you could be lost in the East River for weeks, and no one wouldn't be the wiser. We could just marionette you right around town.
Oh yeah, you wouldn't. No one would know. I could be an avatar right now through ChatGPT going with this. Probably a little delayed. There'd probably be too much of a delay, but next year, right? Next year, no one ever has to miss a pod, right? It's either you as a person or your avatar. You're gonna have to
change the name to This Week in Exponential Pod, or This Week in Exponential Stocks or something.
You got it, man. Yeah. You got it. This stuff is all coming up. All right, fellas. Well, this is good. I know you guys both got to run to go do something, so I appreciate you making time this week. But enjoy Art Basel. Don't buy anything, Clint, especially after a few cocktails. Don't get that checkbook out.
I'm not even gonna. I'm here. That's what's going on here. I'm actually speaking at a conference, so I'm gonna.
You're working. All right, fair.
Yeah, fair stay as far away from
that conference
spot.
Respect.
Go. One line. What conference?
Alts Miami. So Alts Miami, Kaya and the CFA putting it on, and it's here in Miami at Eden Rock. So it's tomorrow. Actually, I think it starts tonight, but it's tomorrow. Go check it out. I'm speaking on investing in emerging managers. So,
well, hats off for going down to Miami and working while it's so warm.
That's what you got
down there. So I respect that. All right, fellas. I appreciate you guys. You guys have a good one. Okay.
You too.
All right.